We've certainly seen that from the Treasurer here in Australia, but it's not just government. Central banks are also calling out these banks.
That's right. The central banks are concerned because they want people to save. If they're saving, they're spending less money. If they're spending less money, it's less likely to drive inflation. So they want the banks to raise those deposit rates to attract people to save their money. And unfortunately, that is not really happening at the moment.
Why? Why is this cycle different?
This cycle is different. I mean, you're right. And this point of the cycle, we normally see this. The deposit rates definitely lag behind the rates that the banks charge out to borrowers. This time, though, it's a bit different because the banks are awash with cash. A lot of people built up huge amounts of savings during the pandemic, both consumers and businesses. And so the banks don't really feel that they need to compete to get these deposits in. And it's really the competition between the banks that drives the rates up. So if one bank raises its deposit rates, another bank is likely to do so as well to compete. And we're just not seeing that at the moment. There isn't the competition there, which is normally there.
What can consumers do at this point?
Well, I think consumers do need to stay vigilant. Often, even at the same bank, there's a difference in the rates. And that can be as much as 2, 3, even 4% of what they're offered. So you really need to shop around and have a look and see to make sure you're getting the best possible rate for your money in the bank.